Welcome to the Opening Bell Report.
Today, we are unpacking a story that it feels a little bit like financial fiction, but I assure you, looking at the charts, it is very, very real.
It really is.
I mean, if you were watching the markets on Friday, February 13, 2026, you might have thought your data feed was broken.
Yeah, you'd be hitting refresh a few times.
Exactly. Usually Friday the 13th is for bad luck, horror movies, that kind of thing. But for shareholders of Rivian Automotive ticker IVN, it was the exact opposite. It was a moonshot.
A total moonshot. We're talking about a move that usually requires, a buyout rumor or some massive merger announcement. But this was purely earnings driven.
And the scale of it is what gets me. I want to set the stage here with the raw numbers because they're massive.
Oh, for it.
The stock didn't just tick up, it gapped up. It opened at $14, ran all the way to an intraday high of $17.77, and closed at $17.73.
Which is what's the final tally?
That is a plus 26.64% gain.
Yeah.
In one day for a car company.
Right. Not some biotech stock that cured hiccups, as you said. It's a major manufacturer.
Exactly. And that's what makes this deep dive so critical. We need to figure out the why. Is this just, meme stock energy coming back?
Is it the to the moon crowd on Reddit having a field day?
Or, and this is the bigger question, did something fundamentally change inside Rivian that justifies adding a quarter of its value in, 6.5 hours?
Is it hype or is it heft? That's the question.
Right. To answer that, we're tearing into a comprehensive financial analysis report dated February 14th, 2026. And it breaks down what they're calling the gross profit pivot strategy.
It reads like a thriller for accountants. I love it. But before we get into the business itself, we have to look at the mechanics of the trade.
The moves itself. Because it wasn't just the price that jumped out at me, it was the volume. The report really highlights this. Why does this specific volume number matter so much?
The volume tells the real story. Price can be manipulated on thin volume, but volume is conviction. On an average day, Rivian sees about, 39 million shares trade hands on Friday. 126 million shares.
Whoa. That's more than triple.
More than triple the average.
So, translate that for us. That's not just Dave and his cousin day trading on their lunch break.
Definitely not. No. When you see volume spike like that, it signals that institutional money is entering the chat.
The big guys.
The whales, the mutual funds, the pension funds, they've been sitting on the sidelines for years, watching Rivian burn cash, just waiting for a sign. Retail can create a pop, but to move a multi-billion-dollar company up 26%, that is a stampede.
But there's another layer, right? The report mentions the squeeze factor. I feel like we hear that term a lot since the whole GameStop saga.
It was a huge accelerant here.
How so?
Well, you have to remember, going into this report, the short interest, that's the percentage of shares bet against the company, was sitting at around 15%.
So a lot of people were betting it would fail.
A very crowded trade. They were betting on the stock going down. So imagine you're a short seller. You borrowed the stock at $13, expecting it to go to 10.
And then the report drops.
The report drops, the stock opens at 14. You are immediately losing money.
So you have to buy it back to stop the bleeding?
You become a forced buyer. You don't want to buy, you have to buy. And that buying pressure adds to the institutional buying, which pushes the price higher.
Which forces more shorts to cover.
It's a feedback loop, a vicious cycle for them. That's what poured gasoline on the fire.
Okay, so the squeeze explains the speed, the velocity of the move, but it doesn't explain the spark.
Exactly. The price action is the effect. The earnings report is the cause.
And this is where it gets confusing for me, because looking at the headline numbers, it doesn't immediately scream buy.
This is where most casual observers get tripped up, yeah.
Right, because the report points out that revenue actually dipped. It came in at $1.29 billion. I mean, usually shrinking revenue for a growth company is a huge red flag.
You'd be running for the hills.
So why on earth did the stock soar?
Because the market stopped caring about growth at any cost. The magic words here aren't total revenue. The magic words are gross profit.
Gross profit. Okay, break that down. Why is that the signal Wall Street was waiting for?
Think about it this way. For years, the biggest knock on Rivian was that they were losing money on every single vehicle they built.
Selling dollar bills for 50 cents.
Exactly. It doesn't matter if you sell 1 million cars. If you lose money on every one, you'll just go bankrupt faster.
The report has this section, the voila moment, which compares the old reality of 2024 to now, and it's It's stark.
Let's talk about that old reality. In 2024, Rivian was losing approximately $30,000 on every truck they sold.
Stop there. $30,000. They were losing the price of a brand new Honda Civic on every single truck.
On every single transaction. You hand a customer the keys, and you might as well tape a check for 30 grand to the dashboard.
That's a cash incinerator. I can see why the stock was beaten down.
Of course. But then we look at Q4 2025. What changed?
Everything flipped.
Everything. In Q4 2025, Rivian posted a positive gross profit of about $144 million.
So they're no longer bleeding out just to build the car. When they sell a truck now, they actually make money on the hardware.
That's it.
But how? Did they just jack up prices?
But that's the amazing part. They didn't. It was all operational surgery. They stopped paying insane fees to fly parts in. They got the factory running at the right speed.
So they got efficient.
They got efficient. They renegotiated supplier contracts. They stopped paying for air freight. The so-called learning curve tax is finally gone.
And that's the pivot.
That is the pivot. It's their Tesla moment. Once you prove you can build the car for less than you sell it for, the business model is validated. It's not a science project anymore. It's a real business.
Quality of revenue over quantity. That makes sense.
Yeah.
But looking forward, the report moves on to the 2026 forecast, and management is guiding for 62,000 to 67,000 deliveries.
It's aggressive. That represents a 50% year-over-year growth rate.
Okay, but play skeptic with me. We see headlines every day that the EV market is cooling off, Ford is pulling back, Lucid is flat. Why should we believe Rivian can grow 50% in this market?
It's a fair pushback. The macro data does show a general slowdown, but the report argues Rivian is sort of immune to that because of brand elasticity.
Brand elasticity. Sounds like marketing jargon.
It is, but it's real. Think of it like this. Ford is trying to sell electric cars to normal people worried about interest rates. That's the mainstream market.
And Rivian.
Rivian is Patagonia. They aren't selling a commodity. They are selling an adventure vehicle, a lifestyle. The people buying an $80,000 R1S aren't as sensitive to rates. They want the cool truck.
So they're playing in a different sandbox. While everyone else is hitting the brakes, they feel they can hit the accelerator.
Precisely. And that contrast makes Rivian stand out. It used to be Tesla and the rest. Now it feels more like Tesla, Rivian, and then the rest.
That's definitely the narrative the market is buying. But a huge part of this isn't even about the trucks they sell today, is it? It's about what's coming next.
The R2 platform.
The R2. The report says the stock price today is basically pricing in the success of this future vehicle.
It's the bridge to the mass market. The R2 is supposed to launch late 2026 with a price tag around $45,000.
That's a totally different ballgame than an $80,000 or $90,000 truck.
It's massive. That's the heart of the American auto industry. If the R1 was their Model S, the expensive halo car, the R2 is their Model Y. It's the volume seller.
So the stakes for this launch are incredibly high.
Couldn't be higher. The entire growth thesis rests on the R2 being on time and being a hit.
Which brings us to the reality check. The valuation. After a 26% jump, is the stock expensive or are you just buying high now?
That is the million-dollar question. And to answer it, you have to use the right multiples. PE ratio, price to earnings, is useless here.
Because they're still not profitable on the bottom line, right?
Correct. The E is negative. So we look at the PS ratio, price to sales.
And where does Rivian sit now?
After this jump, Rivian is sitting around 3.6 times price to sales.
3.6. Okay, give me some context. Is that good? Bad?
Well, let's compare. Legacy Auto Ford, GM, they trade around 0.4 times sales.
Whoa, wait. So Ford is 40 cents on the dollar of revenue and Rivian is $3.60.
Yes, but let's look at the other side. Tesla is trading around 7 times sales.
So Rivian is right in the middle. Not a car company, not quite Tesla.
Exactly. Wall Street is treating it like a tech stock again. They aren't valuing it on today's sales. They're valuing it on the promise of future growth.
You're paying a premium for growth that hasn't happened yet.
You're paying for the expectation of growth. It's like buying a sapling that might become a massive orchard instead of a mature tree that just gives you apples. The market thinks the sapling's going to grow like a weed.
But if that sapling dries up,
then you overpaid for a twig.
And that leads right to the risks. The report calls that a cash crunch and the danger zone. It says they have a cash position of $3.57 billion.
Which sounds like a fortune to us.
To me, it sounds like all the money in the world. Why is that a danger zone?
Because in automotive manufacturing, that's just walking around money, developing a new vehicle like the R2, retooling the factory, marketing. It burns cash at a staggering rate.
So do they have enough?
The analysis says they have enough cash to get to the R2 launch, but barely.
So it's a tight runway.
It's a very tight runway. Think about it. If the R2 launch is delayed by 6 months, if there are production snags, that runway runs out.
And if they run out of cash before the R2 starts making money,
They have to raise capital, sell more stock,
which dilutes shareholders. The pie gets sliced into smaller pieces.
and the stock would likely take a huge hit. So the bankruptcy thesis is dead, but the execution risk is still incredibly high. Perfection is required.
So let's summarize the verdict from the report. It feels like the main takeaway is a major narrative shift.
Absolutely. The bankruptcy thesis is out. The growth thesis is back in. The market has decided Rivian is a survivor. That 26% gain was the reward for that.
And for the traders listening, the report mentions some technical targets.
Right, we closed at 17.73. The key level to watch now is 18.50. If the stock can break and hold above that, the path is pretty open all the way to the 52-week high of $22.
So if this momentum holds, there could still be room to run.
Potentially. But, trees don't grow to the sky in a straight line. After a 26% move, some consolidation would be perfectly healthy.
It's just a fascinating turnaround, going from are they going to make it to how fast can they grow in one report.
It's the beauty of the market. It doesn't care about yesterday. It cares about what you're going to do tomorrow. And right now, it believes Rivian's tomorrow looks profitable.
So what does this all mean for you, the listener? Whether you own it, are thinking about it, or just watching, here's the final thought I want to leave you with.
And this is the big one.
The market has forgiven Rivian for now. They've cheered the gross profit. But with cash tight and absolutely everything riding on that late 2026 R2 launch, ask yourself this. Are investors buying a car company right now, or are they simply betting on a deadline?
Ooh, that's good.
Because if that deadline moves, the whole bet changes.
Are you investing in the product or the timeline? That's the question.
Something to chew on. Digest those numbers, look at that chart. Thanks for listening.
Don't forget to like, share, and subscribe for more.